Welcome back and welcome to our brand new daily technical trading journal. Over the course of the week, reporting on the economic data, sometimes it might be helpful to take a step back and look at the actual markets and extrapolate from the price movement what's happening in the markets and how we can take advantage of it. So, what we're going to do on a daily basis is take a look at some of the different markets, and this list won't end here. If there's any particular market you have some interest in, we certainly will be adding to this list over time. But so far, we have the Dow Jones Industrial Average, S&P 500, Nasdaq, Russell 2000, commodities like crude oil, gold, and silver, treasury bonds like the 10 and 30 year, uh, Bitcoin and Ethereum, which certainly have been trendy lately, and the VIX Volatility Index. And the way we read this is very simple. Take a look at the daily performance. The Dow Jones Industrial Average shows us 44%. Well, on a daily basis, in this particular case, as of December 22nd, last Friday, the Dow Jones Industrial Average closed a little bit closer to the low of the day than the high. If the market, for example, closed at the absolute very high of the day, it would receive a score of 100%. If it closed at the absolute low, 0%. 44%, a little bit below the middle part of the trading range. So we see here a daily performance of 44% over the past 5 trading days. Dow Jones Industrial Average closed at a little bit higher than the midpoint. We have a 30-day performance at 93 and a 90-day performance at 95. So in the longer term time frames, we certainly see markets closing very, very close to their highs. Now, for example, in terms of the equity indices, we can see that all equity indices, the Dow Jones Industrial Average, S&P 500, Nasdaq, are all trading very close to the 30 and 90-day highs. It shows us a very strong long-term bull market is intact. However, the 5-day performance shows us the Dow Jones Industrial Average is lagging behind other markets, while the Russell 2000 at 86% is very close to its 5-day high. Now, there are differences between these markets. The components, for example, in the Dow Jones Industrial Average, those are the 30 largest stocks like Disney and Boeing. The Russell 2000 primarily is comprised of very small cap companies. So we see small cap companies are outperforming the largest companies out there. When does that happen? Typically during very strong market conditions, when the market has an appetite for even the smaller stocks, willing to take a risk because, well, everything's going up. So right now we see symptoms of a very strong bull market, in fact. Now, take a look at crude oil. Closed on weak footing, 6% on the daily close almost at the low of the day. And that does, in fact, confirm the overall trend to the downside. On a 30-day performance, we're 48%. That's a little bit below the middle point. But the 90-day performance over the past 3 months, crude oil is very, very close, only 21% off the low of the past 3 months. Take a look at gold and silver. Now, in particular, on the 3 month time frame, the 90-day time frame, we have an 80% close and a 72% close. So the very long-term time frames show us a very strong trend to the upside. But you'll notice on the daily close, 25% and 19% respectively. Now, there's a number of different ways we can use this information, but for example, if we look at the longer term time frame and we see a very strong trend intact, traders may wait for a weak daily close to look for an opportunity to buy low and sell high. Take a look at the 10 and 30-year Treasury yields. Now, they did rally on a daily basis to the close, but the longer term time frame shows a very solid trend to the downside. Only 6% off the 3-month bottom on 10-year Treasury bond, 30-year Treasury bond, only 7% off the bottom. So this is really the opposite situation from gold. We see a very weak trend in the 30 and 90-day performances of the 10 and 30-year bond, but rallied up to a close very close to the high on the daily performance. Of course, Bitcoin, Ethereum, they've been very, very trendy lately. Now, they failed to close near the daily highs, but the longer term time frames show us a very strong trend, in fact. So we see here 87% on the 30-day, 95% on the 90-day Bitcoin, 73 and 88 on Ethereum as well. And then, of course, we have the VIX, the volatility index. We're at 36% off the low on a 30-day and 11% off the low on the 90-day. We know the VIX tends to move opposite of stocks. It's a volatility index, also known as the fear index. When there's a lot of fear, the VIX goes up. When traders are very complacent and comfortable with the long-term trends, like we see on the Dow Jones and the S&P 500 and the other indices, we tend to see a weak VIX. This gives us a lot of confirmation that traders on a long-term basis are very comfortable with these long-term stock trends to the upside. So we're going to do our best to publish this on a daily basis. These charts and our notes will be published on Twitter. We have at the Just the Data Twitter channel that will post these notes and much more. And we're going to do our best to update this throughout the week as well. If there are any specific markets you'd like to see or anything in particular you'd like us to cover, please let us know and we'll do our best to include those as well. We hope this has been helpful. We look forward to seeing you back soon.